Ladies and gentlemen, we are back, or I am back with another very interesting mining company interview. I welcome David Cole, President and CEO of EMX Royalty Corp. So finally we met virtually in my virtual office. It's nice to see you, Mr. Cole. How are you there in Denver?
Well, things are really well here. Great to see you, Jan. Always my pleasure to talk with you.
Great. Your company made very nice moves in the past weeks. It had a run that was amazing and surprised many. Oh, it had really a nice run, you have to admit.
Yeah,
and
we have a long ways to go. We have a long ways to go.
Yes, and I made a little comparison to other companies that are in the similar business as you in the royalty business, and yeah, you are really an outperformer. I showed to our audience a little comparison chart that I drew.
Mm-hmm. So we've gone up approximately 5x in the last 4 years, more or less, and that is attributable to the business model and the portfolio that we've built over time.
Now let me show the chart quickly. Our audience is a little comparison chart. I compared EMX to Wheaton Precious Metals and Royal Gold. Everybody knows them. Those are, of course, top tier companies. And this is a chart. It's over 2 years. And as we see, EMX clearly outperformed here. But obviously, in the past 2 months, the gap became wider. It might be, one reason might be a bit of a difference in the business model. While those big companies rather focus on creating cash flow, your business model is a bit different. Would you explain this to our audience?
Sure. The bread and butter of our business is the organic growth of royalties through the prospect generation process. And what I mean when I say that is that we acquire large tracts of prospective mineral rights around the world utilizing our what we call economic geologic expertise, where we seek to acquire prospective mineral rights. We add value by building geologic models, and we sell those on to Rio Tinto and BHP and Freeport and companies around the world, junior companies that are well financed, to advance those assets where we get paid in cash, shares, work commitments in the ground, and always a production royalty. And we've been utilizing this technique to grow a royalty portfolio around the world over the last 16 years. And we're in a position now where we have nearly 90 royalties around the world. We also buy royalties, but buying royalties is very expensive, which is what the other companies that you pointed out typically do, is they buy royalties or do royalty financings. And those royalties, when you purchase them in that manner, trade at a very high premium. And there's a reason for that. They trade at a premium for a fundamental reason, and that is royalties are a phenomenal financial instrument with embedded optionality. And that optionality would include commodity price, of course. And I know you're always interested in commodity prices, Jan, but also the optionality of discovery, which is the most important one. And there's exploration work and development work going on at these mining operations around the world and exploration properties around the world at zero cost to the royalty holder. So all the benefits that emanate from those programs and the new discoveries that are made on those projects are to the royalty holder's benefit. And so over the long haul, it's been shown that royalties can be fantastic things to own. And there's some great examples. One of the royalties owned by Franco-Nevada, one of the best companies in the sector, perhaps the best company in the sector, has paid nearly $1 billion in its history. That's on the Gold Strike mine in Nevada. Yet they only bought that for a little over $1 million. And it's a great example. And that's thanks to discovery optionality. So we want to own as many royalties as possible. We want to own them as cheaply as possible. And we do that through execution of the prospect generation business model, where we're generating royalties through that work.
You gave a good point. A difference that just came to my mind, also a difference to the other two companies. They finance a lot of their royalties via debt. Of course, they both have a good debt load, while you are loading with cash.
Yeah.
But we come to this in a few minutes. First, I'd like to show our audience where your royalty portfolio is situated on the world. This I took from your company website.
Yes.
And it seems to me that you really prefer top jurisdictions, first-class jurisdictions. You have a lot of royalties in the USA, mainly in Nevada, and then in Scandinavia, in Norway and Sweden, some exemptions also in Haiti and Turkey and Serbia. But it seems
Yes.
that you are really cautious to keep the risk for the investors low, right?
So the main risk here is geologic risk and partner risk, having partners that will advance these things correctly and find the right amount of mineralization. But layered on top of that is geopolitical risk, as you're pointing out. And we, throughout our history, we've bounced around the world where we saw the greatest opportunity to risk ratio. And we have worked in crazy places such as Haiti. We sold all of our assets in Haiti to Newmont Mining Corporation profitably for $4 million and kept 0.5% royalty as one example of execution of the business model in a crazy part of the world. But more recently, particularly during periods of weaker commodity prices and cooler capital markets, we have focused in top tier countries, specifically Arizona, where we're the third largest mineral rights holder in the state, and Nevada. We have over 9,000 mining claims in the Western US. When I say that, what I mean is those are mining claims that we have staked, worked on, mostly sold, and maintained a royalty on. That would include the ones we haven't not yet sold, because we're continuing to acquire more prospective mineral rights. You can't own enough mineral rights in our view. So the Western United States and Nevada and Arizona have been a focus for ours for a long time. We have a lot of geological expertise there. And likewise, Norway and Sweden. We think Norway and Sweden is a fabulous place to work. Sweden has 7 smelters, 17 operating major mines. It's a great place to work, and more and more we're seeing interest in our projects that we have in those countries.
And before we have a closer look to particular royalties, there is one royalty that stands out of the crowd. Is your big, I think the biggest deal that you ever did in EMX royalty. That's the Malmyzh copper gold project. I had to look down because it's really difficult to pronounce. I can imagine for an American even worse. Could you give us an idea what happened there? When did you get involved in this project? What was the net profit? It's a fantastic deal. I think a game changer that passed away for new acquisitions and made a totally different company.
Yeah, Malmyzh was a great transaction for us. Thank you for pointing it out, Jan. We, in addition to the organic growth of royalties through prospect generation, which I was just discussing, we also occasionally buy royalties, and we also do strategic investing. And the strategic investing in our history, where we invest in other companies, where we see immense geological potential or a particular business opportunity to capitalize on, our track record throughout our history of a company is nothing short of phenomenal. So in the 16-year history of the company, our internal rate of return on invested capital over our 16-year history is over 40% compounded annually after tax. And that's phenomenal. And that's because of some outsized performance on a couple of key investments, one of which is the one that you just mentioned, and that's Malmyzh, where we invested a total of $13 million over the course of 7 years. And we took out about $69 million cash. And we've received all those monies, and we're very happy. And that's put us in a position where we have as much money in the bank as all the money we've raised in the history of the company. We have no debt. And that's in addition to this portfolio of 2.3 million acres, almost 1 million hectares of mineral right exposure around the world. And so that was definitely a very good transaction for us. There's other company making transactions within the portfolio too, Jan. Yeah, but that was a good one. That was a good one.
And a fantastic proof that your business model works. And we saw already when I showed the map that you have many royalties and other assets in the Western US. You just said Arizona and Nevada. I read at your website you have a big royalty with Newmont, I think. Could you give us a summary about the most important royalties or other assets there?
Yeah. So you mentioned Leeville. That's the one that used to be operated by Newmont Mining Corporation. They formed a joint venture with Barrick. And so Barrick now operates that joint venture. It's called Nevada Gold Mines, is the company that was created to manage the joint venture between Newmont and Barrick in what is one of the largest gold producing regions in the world now in northern Nevada. And we have a royalty over one of the key mines there called Leeville. It's actually over multiple deposits within the Carlin-Trend, which is a prolific gold producing belt in that part of the world. And Nevada Gold Mines, operated by Barrick, have come out with a PowerPoint presentation, which is available on their website, discussing the resource potential on our property. I would encourage folks to look at that. It's significant. And we've always believed that the long-term exploration potential there was huge. And it looks as though the results that Barrick is putting out are bringing that to fruition. Also, there's fantastic underground infrastructure there. Newmont, before the joint venture was consummated, put in a $300 million new shaft to enhance underground infrastructure within the region of our royalty. So that's a good one. Another super key royalty in our portfolio, and probably the company maker that's embedded in the portfolio, is our royalty in Serbia on the Timok project in the Timok magmatic complex. And the Timok complex, you may know this, certainly you'll be interested, is the largest, that magmatic complex which transects through eastern Serbia, is the largest historic copper and gold producing region in all of Europe. And we recognized that a long time ago, started doing work there. We helped the Serbian government after the Balkan Wars were over to rewrite their mining law, to westernize it, and to open up for foreign investment. And foreign investors came in, including us, and acquired mineral rights there. And subsequently, a huge discovery has been made at, I believe it's the largest copper and gold deposit found in the history of Europe. And we're happy to have a 0.5% royalty over that deposit. And it's a key asset. I will point out that asset has changed hands. It was originally made, the discovery was originally made by Reservoir, which was a company that was created as a merchant banking transaction out of EMX Royalty. So when we sold our Serbian assets into a new public company called Reservoir, they went on to make a big discovery with Freeport as their partner. They then sold to Nevsun, and then Nevsun added value and then sold to Xinjiang. And Xinjiang, the state-owned enterprise, which is a big multinational Chinese mining company, is advancing Timok now. And they're advancing it aggressively. The Chinese have a huge hunger for metal, and they're on a buying spree around the world. They're advanced deposits very quickly. So as a royalty holder, that's to our advantage. And they just signed a memorandum of understanding with the Serbian government to invest 474 million USD into the ground, putting the upper zone into production. And that's just the small high-grade upper portion of what is a big deposit. And they're going to put the small high-grade zone into production first, whilst they're developing the infrastructure to go and get the big deposit. And we're very excited about the potential for this for our shareholders. Long-term, this could be akin to our Gold Strike royalty. I mean, the royalty that made Franco-Nevada, as an example. And so that's one that definitely is worth digging into. Yep.
Sounds fantastic. And do you have something similar in Norway and Sweden? I know in Norway there are mostly base metals and nickel and so, and in Sweden gold also. Is there something similar? Can we expect similar things?
Well, the Timok project is a world-class asset, one of the biggest ongoing copper development projects on the planet. We don't have anything like that in Norway and Sweden yet. But certainly we do have some projects that are showing promise for development of new mines. And we love the execution of the business model. We've acquired lots of prospective mineral rights there, covering a number of different commodities: copper, cobalt, nickel, for example, lead, zinc, silver, for example, zinc, copper, for example, as well as some pure gold plays. And we've sold those projects off to major companies, to junior companies, with the intent where they advance those, and we keep royalties, typically around 3% royalties on those, in addition to cash and shares. And it's a good business unit for us. It hasn't had the gargantuan success yet that has occurred in Serbia, but the model is working very well and moving forward, and we're happy with our investments there.
Hmm. You mentioned already the cash flow that you expect from the Serbian copper project, and this is something cash flow investors always like, and for that reason they buy the big names like Wheaton and Royal Gold to get dividends out. Do you have a rough guess what amount of cash flow would you expect this year to come in, and how could this develop in the coming years if all goes well with the operators?
So 2021, not this year, but next year is going to be the big year for us, where we see two key royalty assets come into production. One being the Timok project, and we might see some royalty income flow from Timok in late 2020, but it's more realistic to say that we're going to see a solid year of production in 2021. That's what they have defined with the Serbian government as part of their memorandum. And initially, while they're mining the small upper high-grade zone, we expect to receive $2.5 million per year based upon the feasibility study that was filed by Nevsun prior to the sale to Xinjiang. If anything, Xinjiang will produce more quickly and have expanded on those resource zones. So we believe with recent work done, they have over 12 drill rigs turning on that project, advancing the mineral resource. So we're very excited about that. So $2.5 million US per year coming from the upper zone at today's copper and gold price. Based upon the feasibility study. But when they get into the lower zone, Jan, which will be a few more years down the track, that's when the value of this royalty explodes and it starts to really pump out cash. The other key royalty in our portfolio that will start to cash flow in 2021, if not late 2020, is the Balya royalty in Turkey, which is a 4% royalty on an advancing lead zinc silver mine. And we just came out with a press release talking about a district consolidation which occurred in the Balya area, where the company that owned the big mill bought the company with the big deposit where we have the royalty. So the ores from the deposit will go through the mill, and we as the royalty holders will benefit from that. And there was a nice press release that we came out detailing that information. And that's a lead zinc silver deposit in Turkey. The mill there is a 5,000 ton per day mill. So you can do the math on that. We think we'll do very well. That'll be a multi-million-dollar per year cash flow and royalty.
And then I have to mention again that you still have $70 million in the bank. So I can imagine that we can expect a good news flow and more deals in 2020. Do you have already something envisioned, or what can we expect this year?
Everybody wants to know what we're going to spend our money on. So, and we're very, very, very picky, very careful as to how we allocate capital. And we're evaluating opportunities around the planet all the time. We are prioritizing cash flowing royalties to purchase, but they do trade at a premium. So it's hard to find those at a valuation that we're willing to accept. But we do find other strategic investing opportunities. We recently put some money to work in Rawhide, the Rawhide mine in Nevada, which we're pretty excited about. We think that's going to have an excellent rate of return for us and start to produce dividends shortly. So we're on the look for more accretive transactions to build our portfolio with our cash, but we're going to do that carefully over time.
David Cole, I thank you for the interview, and our people who watch us, our channel here, have a look at this company. I think it's an investment in the royalty business that is really risk averse, or that is minimizing the risk. Have a look. You find more information below the video. I will link to our Goldseiten website where you find comprehensive information in German, also the press releases. And then I'm sure David Cole would also be available for your questions if you have any. Thank you, David Cole. It was a pleasure to talk to you, and I'm sure you continue to execute this year. Thank you.
Jan, thank you very much. Always appreciate the opportunity to speak.
It was a pleasure. Bye-bye.